I mean, I was kind of lucky because I had an earlier start than you. I mean, as I said, when I was 18, I knew absolutely nothing about the stock market.
Yeah.
All I knew is that my granddad had had some, and I wanted to be part of that excitement. It's a bit like the desire to gamble, and I think the human race innately wants to gamble on something always. We like to see if somehow our minds can outsmart the randomness. But the real lesson came to me sometime later. My grandfather was deceased before I was aged 18, and my mother inherited his share portfolio. And so she actually had these physical paper certificates in the house.
Yeah.
And then every now and then a dividend would arrive, and she'd say, "Oh, look, I've got a £1.50 from GKN, not Glaxo, it was called Guess Keenan Ethel in those days. Now it's GKN and now it's gone." And she was always happy when these dividends would arrive. Every company paid two dividends a year.
Uh-huh.
Anyway, long and short, my education actually came some time later. And I don't remember what it was, but it was a few years after 1975. And there was this company, I think it was called the uh, Britannia Unit Trust or something like that company. But they had this double page advertisement in the Daily Mail. Now, Daily Mail is now a smaller paper, but back then it was what they call a broadsheet, a very big newspaper.
Mhm.
And it was two pages in which they set out everything you could possibly want to know about investing in stocks. And
Mm.
basically, their message was, this is what we're doing. We're looking at the balance sheet and finding sound companies. We're looking for companies which are growing their sales. We're looking for companies which are growing their earnings. We're looking for companies where they pay a good dividend. We're talking to the board of directors. We're visiting the companies. And they went on and on. There's 2 pages of things.
Mm.
Basically, it was like a Ben Graham book all over
Yeah,
again.
yeah. That's awesome. Yeah.
And I read this, I was probably at 19 or 20 and had made my first investments and lost my money. And I read this from, every line, and they were promoting a new fund called, I think it was called the Britannia Income and Growth Fund, which
Mm.
promised you two things: income and growth.
And
And, and too good to be true. Too good to be true.
right.
Income and growth. Well, what can't
Yeah.
do better than that. And I went to my mother, very, very excited. I said, "Mum, look at this!" And they got this amazing thing. They give you income and growth, and even better, they say if you send your share certificates to them, this was the advertisement, they'll take the share certificates and charge you no commission to change them into this wonderful fund which is going to go to the moon.
Yeah,
And
yeah.
obviously, I didn't know what I was doing, but basically, I'd suddenly gone from knowing nothing about investments to knowing all about investments. And these
Yeah.
people seem to know what they're doing. So my mother said, "Well, you do it then." And I filled in, I sent off all the shares to the unit trust company, and they sent back the stock transfer forms. My mother signed them and sent them back. And in due course, this share certificate arrived in the post for the Britannia and Income and Growth. And then I went off to work. I went off to the Cayman Islands for a few years. And after a few years, I came back. It was, now we're talking about the 1980s.
Uh-huh.
And I sort of said to my mum, "Oh, what's that share certificate worth?" I went to look it up. And now, when my father died, it was probably worth three or £5,000 on the death duty return. I looked up, it was £60,000.
Wow.
And
Yeah,
the thing
yeah.
had gone up like 10 times in 10 years.
They
And,
were,
and
yeah.
I'm saying, "Oh, wake up call. Equities are the thing. Equities are the thing."
Yeah, 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 yeah. Well,
I wish I could find that paper again that taught me how to buy equities, but I couldn't get the paper again. But what I did do is go down to the library and get out all the books, one after
yeah,
the other, by the greatest investors in the world. And little by little, I was learning all the tricks and trying to apply them. But I still found that every time I bought something, it would immediately go down. Is that your experience? And every time I
yeah,
sold something, it would immediately go up. And
yeah,
I,
yeah.
so I'll tell you later about how I got over that awful experience of selling things which were going up and buying things which were going down. But tell me a little bit about
Well, so hang
your
on.
days.
Don't get me wrong. It's not that I didn't have the excitement to, like, show me how awesome stock investing is. I mean, I worked at a .com company. I got shares at $2 a share, and they went up to $160 a share. I don't even know how many years, not even that many years, so it was just like bang, 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 and that was after 5 or 6, maybe 7 splits. So it was like, wow, this is exciting. So I got the same adrenaline rush, you know what I mean? I mean, I had work to do. I mean, I'm just saying that was sort of a byproduct of my working at the place, but you know what I mean? I felt the same way. I got that sort of excitement about it all. But when the .com crash happened, I was like, whoa, I don't really know what the heck I'm doing here. You know what I mean? I was kind of lucked out in that I never thought of myself as incredibly greedy. So I didn't just hodl it, as the Bitcoiners say. I didn't just hold it. I used it. I had things I wanted to do. So the point is, so I had the same sort of experience, not maybe as dramatic as picking up something 10 years later and seeing the growth. It was kind of happening day by day. But yeah, that was a wake up call that I didn't really know what I was doing when it crashed. And so and then that started the whole path down, trying to learn about the whole, how the economic system worked and stuff like that. So yeah, I had the same excitement that you did almost daily, so.
Yeah, obviously you talked about the .com crash. There was a very large crash before that in my career in 1987. They called it, well, it depends on which part of the world you're in, Black Friday or Black Monday, even Black Tuesday in the UK. It was one of those days. The US stock market had been falling for some time, maybe a few days, and falling quite heavily on the Friday. And everybody thought that there was going to be a plunge in stock prices on Monday. And it was in all the papers that New York's, this was after London had closed, New York stock prices had crashed on Friday. Monday was going to be a terrible day. And so the whole world was preparing to front run New York by selling anything they could through London.
Right.
Unfortunately, on the Sunday night, I think it was, the UK had a hurricane. It's the first, only, and ever hurricane that UK has ever had. And it basically took down all the power around London. It took down all the power lines. The trains couldn't run. The motorways were all closed. Wow. Nobody could get to work. Meanwhile, on the London Stock stage, all these faxes had been arriving from Tokyo and from Hong Kong and everywhere around the world saying, sell at the open. But there was nobody at the stock exchange to take the faxes off the fax machine and find a broker, because nobody could get to work. So the stock exchange, if there was anybody at the stock exchange, it was as good as closed. And so all these faxes were there saying sell at any price and sell quickly, but they weren't going to get processed at best until the next day. So when New York opened, all hell broke loose, and then of course the next day in London, we had a 30% drop, and it wasn't just in London. It was all around the world. We had, at some point, we were 30% off where we'd been a day or two before. And you know what it did to me? I lost a lot of money, but you know what I did? I shrugged my shoulders and said, you know what? It's only stocks, and I still own them.
Right.
I had 100 IBM shares before. They were $150 before.
Right.
I've still got 150 shares. I've still got IBM shares. It's just now $85.
Right. Yeah.
And at the time, the UK government was having what they called the denationalizations. They were selling off the UK government's assets. So there was this massive share sale of British Petroleum being sold by the government. And they'd issued the prospectus and everything before the prices plunged. And then BP was half price overnight, literally. And all the underwriters who'd underwritten this issue, this was the big banks in London, were standing to lose hundreds of millions of pounds because they'd underwritten the sale price. Don't forget, the government was selling these shares at a big discount to what they were worth, except now they're selling them at double what they were worth. Now, the funny thing was, there were something like 50,000 people who, notwithstanding they were buying something for twice the price that it was worth, still subscribed.
Huh.
Um, but
Huh.
but luckily for the British government, or maybe I should say unluckily for the British government,
Yeah.
a big subscriber appeared, and it was the Kuwait Investment Office, and
Oh.
they suddenly bought Britain's crown jewel,
Oh,
i.e.,
interesting. Yeah.
BP. They
Wow.
bought. I mean, they had a like a I don't know what the stake was, but it was enough of a stake for Britain to become extremely concerned about it. And there was
Oh.
years of wrangling between Britain and Kuwait, where Britain was trying to persuade Kuwait to give up its stake in its crown jewel, and eventually they did, and Kuwait exited at a huge profit.
Huh.
Um, but that's kind of the story. But what it taught
I,
me was
mhm.
stocks going down. Nothing's changed. The dividend didn't go down.
Right.
I
Right.
still,
No,
if
I
I bought something for the dividend, I still got the dividend. I just had a lower price. I wasn't going to sell
right.
it anyway.
Right, and that's a good. I think that's the way you have to think about it. You have to think about it as if you own, I don't know, anything else tangible. I mean, it is a piece of a company. It's just it's a little bit. It feels a little bit. I mean, now in the day, without. I mean, when I saw my dad's stock certificates, I had them in my hand. I felt like I mean, even though the companies were gone, I felt like he had owned a piece of something. When I look at a digit on the screen, it's just like, yeah, that's a digit on the screen. It doesn't quite feel. They're not, the digits are not ornate. They don't have beautiful drawings on them. The stock certificates at least felt like money. Actually, is what it felt like. It looked, it's fancy and what have you. But yeah. But yes, if you have to think about it that way. Yeah.
I've got one here.
Yeah. Yeah.
Uh,
Yeah.
it's called the Gold Run Klondike Mining Company.
Oh, that's
Uh,
interesting.
this is a certificate from 1862,
Uh-huh.
when they had the California Gold Rush, and
Oh.
this certificate represents 10 shillings,
Hmm.
10 shillings, British shillings, of investment in the gold mining company. So it's what is it, 10? Oh, 10, sorry, beg your pardon, it's 10 shares of 10 shillings. So a shilling
Hmm.
was half a pound, so it's £5 worth of shares.
Interesting.
And
I mean,
it still has in the old days, on shares to it, you used to have what's called the
right.
coupons.
The
There's still good
coupon.
coupons these days, but they're not attached. And you used to cut the coupon off.
Right.
Here, these are the coupons, and you take the
Right.
coupon to the bank and they'd pay you out.
Right. Right.
So I
Yeah.
don't know
Yeah.
who the original owner of this share was, because in those days these were all bearer shares.
Well, the reason I mean, that struck a note, and I don't think I can find it. Anyways, the reason that the Klondike name was interesting to me is just that my my parents owned a house up in Lubec, Maine, which won't mean anything to you, but up in Lubec, Maine, there was an unscrupulous. I think he was the pastor of a church, actually, because it was the Klondike Church, but or something. But anyways, they had faked a gold rush where they didn't really say that they what they said is that they didn't say they found gold. They didn't mine it, but they could create gold. And I got a book. I've got a book on it. I was going to go look for the book, but I'm not going to do that. Anyways, it's just interesting because it's the house that my parents bought was where this fraud occurred. And yeah, anyways, the name was interesting because it was called the Klondike something or other but it was up in northern Maine. It wasn't, and this was in, I don't know, it might have been in 18. I don't remember what year it was. It was quite a while ago. Yeah, way
It's
before my parents owned the house. So,
the old expression, there's gold in them thar hills.
yeah. Well, apparently, according to the book, they sold stock and they ripped off all kinds of people in Boston and New York who were, looking for a new sure deal, and the person ran away and took all his
Uh,
money, took off. So yeah.
Obviously, if we go back in time, many of these gold mining companies were, if they weren't frauds, they were at best very speculative.
Yeah.